So there's a popular trading strategy right now going on in the tastytrade Facebook group that's known as the DGSS, also known as the Davin Goodwin Synthetic Strangle. It's a 1 DTE Iron Condor and SPX. It's a quick in and out, so it's kind of like a 0 DTE trade, except it's you got one extra day there, more premium, and it's intended to be a quick in and out. It's kind of similar to the Iron Fly. I did a video on that probably a year and a half ago now on the Jim Olsen Iron Fly. And it's kind of similar in that trade where it's a quick in and out. The main difference being with 1 DTE, it moves a little bit slower than the 0 DTE, which is nice. But I am using the Option Omega backtesting software just to see how this trade has behaved in the past. Like I said, it's really popular. This trade is really popular in the tastytrade Facebook group right now. And I'm just going to scroll down here, and you can see in 2022, that's starting about here. It's basically been a straight shot up. So this trade has been, I mean, look at this thing. It's been awesome this year. So how can you not love it? So I'm just going to go over it today, give you my thoughts, maybe when this trade is a good trade to put on, and go from there. So for this back test, I did January 1st of 2018 through today, or actually through yesterday, the 28th of August, 2022. The trade parameters, and there's a lot of variance if you go on the Facebook group. People do a lot of different things with widths and deltas. And this is one of them that I found was pretty popular, and so I just ran with it. So it's a 25 delta on the shorts, on the short call and short put, and then it's $100 wide or 100 points wide. So that's $10,000 in buying power less the credit received. Open the trade at 9:40 a.m. Eastern, so about 15 minutes after open every day. It's 1 DTE, like I said, so not 0 DTE. And for this backtest, I'm only going to do based on one trade per day, one contract. If you want to go up to 2 or 3, that's fine. But for this backtest, I'm just doing one. And then also the profit target and stop loss. So you can play with this. This is kind of what a lot of people have done. So it's a $2 profit target and a $4 stop loss. And then if either of those don't hit, I'm exiting the trade at 2:30 Eastern, about an hour and a half before market close. And then for the sake of this back test, I've also included a $1 fee for open and close per leg. So that's about $8 a day if you figure opening and closing the entire Iron Condor. So this is just with those metrics. Option Omega gives you a lot of great data here. If you are interested in Option Omega, I do have a referral link for 50% off for the first year. It's down in the description if you are interested. Option Omega uses 1 minute data for SPX. So it's really great for anything that's really less than 5 DTE, I'd say. So 0 and 1 DTE, that 1 minute data is really critical when you're fine tuning this. So that's Option Omega. I also have a video on my channel with the co-founder Troy, where I interviewed him. So you can check that out if you're interested as well. So Option Omega gives you a lot of these metrics. The big ones that I look at are the max drawdown and your average P&L per trade. Those are kind of the two big ones. And then, I mean, you can look at the capture rate. If that's positive, that means, you're making money. Same with the P&L. So a lot of great metrics here. So you can see that this one, through 2018 through yesterday, it's pretty profitable. You make about $22 per trade. And so 2022 has kind of been a year that this has gone really well. If you kind of look at this graph, the other time period that it's done well is the end of 2019 through 2020. So I basically looked at those 2 time periods and I said, what do those have in common? And I figured that high VIX was kind of the commonality there. So what I did, I played with the backtesting software here, and it's really easy. You just click new backtest here, and you can quickly change the dates, the parameters, all that good stuff. So all I did was I added use VIX, and what I did was 23 as the minimum is what I found to kind of be the optimal lower bound. And basically this cuts out all this time period. So if I go kind of back and forth, you can see in this time period, it went basically sideways to down. That's why I included the fees as well, because when you're not making any money, those fees are really a drawdown. So with the minimum VIX, you're not putting this trade on, so you're not making or losing. And then if I keep going back and forth here, in this time period too, we pretty much went or with the VIX, we're basically not trading very much. There might be a few trades here and there that were mostly losers, it looks like. But if we go back to the original, I mean, this is where your main drawdown is. So, and then obviously 2022 with a high VIX, you don't miss out on that. So you don't miss out on the 2 times where this strategy has really gone well. So you can see the difference. The average per trade is $69 for minimum VIX of 23, and it's $22 if you trade every single day. Also the max drawdown, so basically 19% drawdown if you trade every day versus a 6% drawdown if you only trade in high VIX. So I think that's really important when you're looking at this. It's a lot less risk, and you're really making more money per trade. If you look at the raw P&L, so this is 11.7, this is 11.2. So you actually even make more money when you only trade high VIX. So this is just one of the back tests I did. Like I said, you could play with the stop loss and the profit target, even the entry times. And you know, if you want to get these fees more accurate to what you are, you could really nail this down what you want to do. So I have not done this trade. I've been doing the 0 DTE iron condor that I've kind of done. So when I first looked at this a couple of months ago, you know, we were back here or so probably. And you can see since then, I mean, it's still gone straight up. So kind of my takeaways is, you know, this trade I think is really good during high VIX. Once we get into the market here, you know, when things sort of even out, VIX gets into the upper teens, you know, then I think this might coming back down a little bit, coming back and normalizing. So something to keep in mind if you are trading this strategy, or something you want to pick up. I think making sure that VIX is high when you're putting it on, I think is important. Other than that, I think this trade is very viable to add to your portfolio. The one thing I will say with profit target and stop loss at $2 and $4, that's on the entire trade. So that's a 4-leg stop or 4-leg closing order. Sometimes it can get tough to close out 4 legs instead of say 1 or even 2. So that's something to keep in mind. This trade, you probably want to watch closely and make sure that things don't get out of hand. I know in Tastyworks, you can't do a stop loss on a spread. So this trade you could not really automate in Tastyworks. If you have, say, Thinkorswim, you could definitely automize this trade with stop loss and one cancels the other OCO order to take profit and loss, stop loss. And with this trade, with being 4 legs, I'd probably do a market order for my stop loss. So one thing that's sort of captured here, So stop loss is $4. With the stock market, if things get out of hand, you could actually lose more than $4. So it could jump up to $5 or $6. The spread helps you a little bit, but you could get whacked on both sides with the bid ask. So it could help you, but it could also not help you. So some things to keep in mind when you're trading this. This is based on the 1 minute interval data, and obviously, the real life trades could vary, especially in the future. So something to keep in mind. Personally, I'm not a huge fan of stop losses on multiple legs. It's just sometimes it's harder to get out, especially with the fast market. But something that's totally viable. Anything else I want to touch on? I don't really think so. I'll just go into the back test here. So you can kind of see what kind of things that Option Omega has for you to play around with. So for tickers, they have SPX, SPY, IWM, and the Qs. And that's all 1 minute data. And you can set up different strategies. Like I said, you can kind of start with one of the default ones they have here. You got quite a bit. Otherwise you can pick what you want here. Use up to four legs. And you can do your starting funds, all that stuff, your entry criteria, your exit criteria. They've added a couple different types of profit targets and stop loss orders, depending on how you want to do it. Same with early exit, commission fees, slippage, all that good stuff. And then another cool feature they have is if you want to see how a bunch of different strategies act together and kind of correlate, you can run all these back tests, save them, and then in the portfolios tab, you can actually go in and you can select all the different strategies that you've tested and put those in together to see, how does that affect each other. So if you're running hedges, you could use this to see, okay, how does my hedge actually help out if it crashes versus my portfolio of a different strategy, stuff like that. So I think this is pretty helpful. If you guys have any suggestions or have any experience with this DGSS trade, please leave them in the comments. I'd be willing to hear what you say. Like I said, I haven't traded this live. I've been kind of wanting to, but with my 0 DTE, this is kind of similar. And like I said, it was a couple months ago when I first looked at this, and I think the P&L has doubled since then. So definitely a good strategy. And as long as VIX is high, I think this is something we can do in the future. If you have any questions, you can reach out to me at IncomeOptionsTrading@gmail.com, or you can leave a comment below and I'll reply. Thanks for watching.